and welcome to the BullCast podcast. I'm Katie Pickler, and with me, as always, is Cameron Span.
Katie, you sound extra chipper today. I don't know if it's because I missed the past two shows or what, but you are a bubble girl.
Well, y'all, we just celebrated our 4th year, so we just had our 4th birthday.
Oh, we did. We celebrated our 4th birthday. It was June of COVID that we started this masterpiece.
I know, it's still crazy to think that we're still doing this 4 years later, and we still have content to talk about, and we're still having people that are finding out about us for the first time. This episode is actually the kickoff of season 8.
Yeah.
And I didn't introduce you. Court Winsett.
Oh, yeah, I'm Court.
In case you don't know.
I'm Court. I still don't know why we do seasons because, we never stop recording. It's not like we do a season, finish the season, and then take 3 months off.
I think that was like the thing to be, I don't know.
Yeah,
in the podcast world, it's like, here's your different seasons. But
well, I don't mean to get emotional about it. I just...
Oh, look at that good tie-in. So this episode is the emotions of investing. Mm-hmm. And so we've talked about it before, but if somebody is talking to you about their money, they are to their core because that is the most intimate thing. You think about it, people are not very open about how much they make. They're not open about how much they have saved. They don't talk about money troubles one way or the other. So, this is emotional.
Oh, yeah.
Having money, not having money.
100%. It's one of the things that drives everybody, obviously. You know, my favorite thing recently is all of the sarcastic memes related to jobs that you see on Instagram and Facebooks and so forth that are stuff like, what was the one that I read the other night? It's like, why do you want to work here? Well, because I need money to live and you pay me. So I will continue to work here until you stop paying.
That's a whole nother episode, but it's very much, we go through cycles of working to live or, live to work. Mm-hmm. And a lot of it right now is people are going to work for a paycheck. And that's what it is. And I was talking to a group of educators recently, and they were talking about the struggle of not finding those teachers anymore who, what they're getting paid. They're like, I'm going to be there during the time I'm supposed to be there. I'm not going to volunteer to stay 2 minutes later or to run this club or to show up early to greet the kids going off on their competition. And in one part, it's sad, but in the other part, it's we got to think about the compensation. And so there's again, that's a whole nother episode.
It's a whole nother episode. But the reason I brought it up is because it so points to the fact that for a lot of people, you're driven by money more than a lot of other things. And it drives you. It affects you emotionally. It's a major part of your life.
So Nicole put that down as a next episode for us. Nicole is always listening. She's like Roz from Monsters, Inc. I'm always watching. Okay, before we get into the emotions of investing and really talking about those different emotions that you have, we'll just do a real quick round robin list of most emotional movies of all time.
And just for the record, Cameron had to step out, so that's why you only hear Katie and I doing the round robin, but maybe he'll be back, maybe he won't. Maybe he got emotional. Who knows? Most emotional movies of all time. Katie, why don't you kick it off?
Steel Magnolias.
Oof.
Yeah.
Have you ever seen the play?
I have not seen the play, but the movie is great.
The play has a punch to it that, I like the play.
Okay.
There's a good scene in it. Okay, next on the list is My Girl.
Oh, oof.
Yeah, that's another killer one.
Yeah. The Fox and the Hound.
Yeah. I loved this movie. Like, I watched it in theaters as a kid. It came out a long time ago. And I remembered it very, very fondly as a grown-up. And so I showed it to my kids, and they were like, Dad, why would you show this to us? It's so sad. Yeah. Next is Titanic, which,
yeah, you know what's going to happen. Up.
Oh, my God.
The very beginning part.
Yeah, they do that gut punch in the front.
Exactly.
Oh, man. The Color Purple. I don't remember The Color Purple being sad.
There's a lot of emotions in it.
I guess we're talking about emotional movies, not necessarily just sad.
Yeah, Fried Green Tomatoes.
Oh, yeah.
That's right. Fried Green Tomatoes and Steel Magnolias are always kind of coupled together.
Yeah. And I don't know that this one was necessarily a huge hit, but I loved the movie. It was called Stepmom.
Oh,
it was Susan Sarandon.
That breaks my heart so much. Julia Roberts. That one,
yeah, that's a tough one. And the next one.
Oh, my God.
The Green Mile.
Yes.
Oh, my gosh.
Boo-hoo. Ugly cry with that one.
Yeah.
The Lion King, absolutely.
Yeah,
it's, again, that was one as a kid I remember being sad. I watched it as an adult, not too long ago, and I'm just like, oh, my God, I'm
Yeah, there are not many movies that get me choked up, and this next one is also one that did not get me choked up. But I know a lot of people love it. It's The Notebook.
Yeah, I think it's emotional, but it's not like some of these where it's just like boom, there, break your heart immediately.
It's a very I have heard romantic movie, I guess. So maybe it's a little bit more lovey-dovey.
Yeah, Fault in Our Stars. This is a newer one. It's great.
This one killed me.
Yeah.
Dead Poet Society. And the emotion I feel when watching this movie is anger. I get so angry about this movie.
Yeah.
I mean, it is a classic. The adults are all evil. The kids are, except for one adult. The adults are all terrible people, basically, except for this one guy. And the kids are all adore this one guy and are all crazy. And then, of course, the mean adults get their way.
Yeah. Do you know this next one?
Yes, actually, I'm familiar with it. It is Atonement. And
I haven't even heard of this one.
Yeah, it was like either Oscar winner or definitely an Oscar nominee. It was good.
Okay. Well, Marley and Me. I've seen many of memes and stuff out there that it's like I can watch a bunch of people pass away, but it's you kill a dog in a movie and
well, I mean,
done.
Listen, the one that's kind of a spiritual brother or spiritual sister of Marley and Me is Hatchie. Except in Marley and Me, the dog dies, and in Hatchie, the owner dies.
Well, and like Homeward Bound isn't on here, and that one is always just...
Yeah. Next on the list is Forrest Gump.
Yep.
Yeah.
So I find out more and more about this movie the older I get. Like
I'm not a smart man, Jenny.
This goes to tell you that there is a lot...
what love is.
I didn't know what happened with Jenny.
Have you not seen the movie?
Yes, but when I watched it when I was younger, that went way over my head.
Oh,
I did not realize that she had AIDS. I did not get that at all. But that goes to tell you, and I don't know kids these days, but sometimes you can watch these movies and you don't totally get everything. And so your kids are somewhat still sheltered.
Yeah.
Because there's several movies I've gone back and watched as an adult and I'm like, oh, that's what was happening. I had no idea. I just thought she was sick. I didn't realize she had AIDS. What? The Way We Were.
Yeah,
it's
I've
an
never
old
seen
one.
this one.
It's a good. It's a good heartbreaker. And Mr. Holland's Opus,
of course,
obviously.
Yeah, and then I'm going to throw one more on there for a bonus because it's an absolute gut wrencher. Is Terms of Endearment.
Terms of Endearment. Armageddon, like that. That is my tearjerker for sure. You cannot.
I love that you went with Armageddon.
I used to when Liv Tyler is there talking to the screen, saying goodbye to her dad, my heart breaks. It was, I think that came out in a point in my life that it just hit all the emotions. And I'm like, yep, Armageddon's my tearjerker movie. Amazing. I need to cry.
Amazing.
So it wouldn't be right to not mention Inside Out, and now there's Inside Out 2. Mm-hmm. Nicole added this one to the list. It's a cartoon that really talks about all the emotions in your head, which is really kind of scary, but then kind of fun.
I mean, it was a fun concept, and I was really looking forward to seeing the movie, and I watched it. I mean, it didn't blow me away, but...
It's kind of fun to think about that you have different characters in your head. I kind of joke that I have different alter egos, and, sometimes we'll reference to that, I'm a little bit Edna today, and that's kind of my grandma, old lady, hungover persona.
Yeah, no, I just stay the same grumpy person all the time. Anyway.
Okay, so that is our emotional movies of all time. Obviously, I know you're probably kicking and screaming listening to this because there is something we missed.
Oh, yeah. I mean, I'm sure there
are
5 dozen that cause emotions in me that, we didn't even really hit the ones that are
Yeah, I mean, I know It's a Wonderful Life. We put that on, my dad will, instantly be in tears because it's such a great, heartstrong.
Trains, Planes, and Automobiles
every movie, a lot of these classic movies have great emotions, and that's where you have multiple emotions throughout some movies. You're happy, you're sad, and that's a good movie, is if they really bring you into the story and get you to be a part of these emotions. So it's switching gears. It's the same thing when you think about investing. And, we look at it as there's emotional cycles that you have with this, and it's with investing, but it's with anything. So let's kind of start with this first of the emotional cycle of investing.
Okay, so optimism, obviously, positive market outlook. We would call it being bullish on the market, high expectations. Obviously, if investors are optimistic, then you're going to see increased investing.
You may be a little bit more willing to take some higher risk.
Yeah.
You're excited, you're gung-ho, you're positive about what you're doing, and so you're optimistic. Then you're excited. and, thrill of seeking investment growth, reinforcement of positive expectations. So this is when you've invested and you started to see some positives.
Yeah.
You started to see that your money is working for you. And so what does this do? This may get you to increase your investments. You may start doing a monthly contribution. You may have more money. Like, oh, if you can do this with $5,000, what can you do with $10,000?
Yeah,
what can you do with $20,000?
You might start disregarding your risks altogether.
Exactly. You may just be so enamored with the glitter of, hey, it's going well, we're making money, that you were just like, yeah, let's do it. Oh, I don't care if that's a risky stock. Let's go.
But it gets to like now you reach the level of thrill.
Ooh, so we're on a roller coaster now. We've hit the thrill.
Thrill is basically peak confidence. It's a belief in your own exceptional investing ability, or at least in the exceptional investing ability of whoever the person is that's advising you.
Yeah, I mean, you could be doing this on your own.
You're basically going to, at this point, be maximizing your investments. You're going to be taking the highest risks. I can't imagine that there's a level after that. You're basically just like, yeah.
Oh, no, you're in euphoria now.
Sky's the limit.
You're in euphoria. You feel invincible. Perception of investment is flawless and often marks the peak of an investment bubble. So I kind of picture this as a great example of those people that had GameStop, had some of these different stocks out there. Whatever it is, if you are investing, maybe you're doing it by yourself, maybe you're working with somebody, and you just see it and it keeps building, building, building. You're like, oh my gosh, I picked that stock. I did that, or my investor did that. Like, we got this. This is great. Everything is wonderful. I'm making so much money. This is fantastic. And did you hear me say bubble?
Yeah.
What happens to bubbles?
They burst.
Bubbles pop. We go popping bubbles.
Bubbles burst. The bubble burst.
The downward spiral.
Okay, so anxiety. Initial realization of that you could potentially lose something. You've got concern over a market downturn. This is going to cause hesitation. It's going to even cause some people to sell off.
Yeah. You're starting to go, I'm not making anything.
You're going to at least probably be asking your person, like, hey, should we be selling? This is
we were up on this high.
Yeah,
what's happening
what's
now?
Going on?
You're questioning now. You don't feel invincible anymore. So then you go into denial. Your belief that the downturn is temporary. Your refusal to accept that this stock, this trade, whatever it was, you don't want to accept it. And you're holding on to losing investments, missed opportunity to limit the losses.
Yeah.
Again, this is us just very generally talking about the cycle that can happen. Sometimes the denial is granted. Sometimes it's right. Sometimes it's not the best opportunity, but sometimes you've got to just kind of reality. And this is where this cycle we're going through, I think, is where it's important to make sure you have a financial partner to help you figure out and navigate each of these cycles.
Well, one of the things that we're not showing them behind the curtain, but a lot of the things that we've talked about here are things that we learn about in behavioral finance.
Yes.
And the specific different types of behavior that we learn about in behavioral finance. So, like, for instance, holding on to a losing investment, that there's a specific...
Yeah. Why are they holding on to this? And there could be an emotional attachment that, oh, this was my grandmother's, Campbell soup stock, and I want to hold on to that. Or, my uncle bought AT&T for me when I was this years old. Or it's, trying to break that down. So there's micro levels within this cycle we're going through. So we'll just keep going through this cycle, and then we'll kind of talk a little bit more about the ins and outs.
So fear.
Yeah.
Right?
Absolutely.
Characteristics, recognition of real financial risk, worry about losing more. So you've lost some, and now you're starting to become a little bit more conservative, and you're going to start selling things off.
Because you're panicking. I can't lose any more. You think about like the animal that's like, oh, I got to scramble and hold all my acorns because I can't lose anymore.
Yeah, and here's one of the things that we frequently tell our clients is people very frequently sell when they're losing and buy when a stock has hit its peak, and that's the wrong approach to it.
And again, we may talk about this more at the end, but it's making sure you're talking to somebody when you're starting to get to this denial and the fear category to differentiate the difference between losing principal and losing gain.
Yeah.
That is a huge difference of did you just ride this storm up and you had a lot of gain and now you're starting to lose the gain, or are you actually losing some of the principal?
Yeah. When we have a client that comes to us and says, like, what's going on? I've lost money. You told me this was going to be, and we're like, you haven't lost money.
No.
You're still
You've lost some of the gain.
Yeah. Or if they come to us and they gave us $100,000 and now they're down to $60,000, then that's
a horse of a different color.
Yeah.
Okay, after fear, we've got desperation, seeking to recover losses through high-risk investments, potentially compounding losses. Okay, so this is like, think about those casinos, like...
Yeah, I was about to say, it sounds like a gambler at the casino.
Yeah, gambler at the casino. I'm thinking like Chevy Chase in Vegas Vacation when he had nothing, and he just like bet it all, like... This is my last hope. I'm going to go big or go home. Mm-hmm. That's where it gets even messier, and you could put yourself in an even worse situation, and letting your emotions of denial and fear and desperation drive you when maybe that wasn't what you needed to do, and you could have stayed more in the anxiety. Okay, after desperation, panic.
Panic attack. I'm familiar with those.
There's the alarms.
Okay, overwhelming fear, irrational decision making, mass sell off. You're basically going full on into cash. You don't want any of this stock stuff anymore. It's just bringing you down. You're going to see significant market downturn because of it. If people are panicking, the market obviously is going to take a hit.
Court, I'm panicking. There can't be anything else after panic. Like, I'm just done, right?
Well, I mean, then obviously there's capitulation. You've got acceptance.
Okay, so we're accepting it now.
Yeah, there's basically a full pull
Selling at the lowest point, locking in losses.
Yeah, at this point you're just like, oh well.
Yeah, you're kind of you're Eeyore. You're just like, oh bother.
Yeah,
no worries now. Let's just move on. Okay, but there's another phase, the recovery and the reflection phase.
Indeed.
So
you capitulated, right? You were sad.
Such a fun word.
Oh my.
I don't feel like Eeyore would say capitulation.
I capitulated.
Well, he wouldn't say it, but he would be very familiar with despondency.
Loss of faith in investing and low point of investor sentiment.
There's no point in investing.
Yeah.
You're just going to lose your money.
Yeah, definitely there. And then it rolls into depression. Mm-hmm. We're in our full Eeyore stage at this point.
All you can do is second guess yourself. You're trying to understand the mistakes that you made.
You're trying to understand it. Then your depression, you kind of start seeing the light at the end of the tunnel. You start seeing some hope and your renewed belief in the potential of the market recovery.
Well, if you can start to understand your mistakes, then you can maybe realize that there were some
hope.
Things that you did wrong that you can fix, and you might be able to.
Maybe you shouldn't have,
get back.
Yeah, maybe you shouldn't have panicked. Maybe you should have, stayed with the course and figured it out and made sure you were on the right investment course for that. So it's not the song. You got to have faith. You got to have hope. I don't know. Sorry, that flew. Yeah, no.
Yeah.
Flew.
That flew flat.
That flew flat.
Okay.
I'm back.
Okay. Cam's back.
Did our listeners know I was gone?
Yes.
Yes, they are aware.
No secrets here.
I mean, when we go through a whole list of
and you're
movies
not there,
and you're not making any comments, there's
sadness.
They know. They're like, do we have?
Where is Cameron?
Do we have Cam tied up in a corner somewhere? What's happening here?
IT issues, but they are solved.
Okay,
Yay, good. So we've got hope. We're going to slowly re-enter the market. Maybe we're going to be much more cautious. We're going to be a cautious investor. So this is like the person I can think about who has, come to us and it's maybe like, I've had a bad experience. So they're willing to accept that they shouldn't completely write off getting into the market, but they also want you to be transparent and understand what they've been through, that they've been through all these different stages. So now we're going into relief.
Yeah. You see that the market is recovering, right? You're ready to stick your toe back in. You're going to have greater confidence, but it's going to be also, there's going to be greater caution as well. Hopefully you've learned if there were mistakes that you made.
I just pictured Uncle Ben when you were saying that.
Then hopefully, yes. With great confidence comes great caution.
Relief?
I don't know. Anyway. You go through these cycles and hopefully you learn, and then eventually you're basically seeking equilibrium. You want an equal measure of caution and confidence so that you can make good choices, but not be emotionally ruled and
you're not going to go all the way
to bad choices.
Yeah, you're not going to go all the way back to the optimism and excitement and thrill and euphoria. You're going to have some kind of balance of peace. Unfortunately, anytime you talk to any financial professional, they should be telling you, there are no guarantees in this business. There's no crystal ball with the market. No one can tell you, hey, this is what this has done. It's going to definitely do it again. The only thing anybody can really guarantee is at any given time, the market will go up, will go down, or will stay the same.
Yep.
And so nobody can ever fully promise you that there's peace of mind, that you're going to have, comfort, you're going to have euphoria. It's an ongoing cycle. And so where does your financial planner, your advisor meet you in that cycle, and how can they assist you through this? But No guarantees, no promises, no peace.
But Katie, I haven't learned from my bad mistakes in the past. What should I do?
We need strategies.
Indeed.
We need to strategize to manage emotions when investing. And this is something, honestly, we do a ton. And when times are great and the market's doing great and people are making money, there's not a lot of management of that because happy people are making money and they're happy. Versus when we know that things are taking a turn, whether temporary or heading that way for a little while, that's when a lot of the phone calls come in. And that's where a lot of coaching comes in on remember your plan. We put out a great guide a little while ago called How to Survive a Bear Attack. And it was a play on bull market, bear market. And it struck to the core of investing. What is your timetable? How long are you going to be able to invest? What is your risk level? What do you need these funds to do for you? Do you have a plan? And then you're sticking to it. So obviously, that's where I say the people that get really desperate and emotionally tied are the ones that probably shouldn't have been investing to begin with, or they have the wrong assets to the wrong timetable and wrong risk level.
So the first way that you can manage your own emotions, obviously, is awareness and education. And so hopefully you're off to a good start just by listening to this episode of the podcast. I mean, being aware that these things...
Get some education.
Yeah. Be aware that these things affect the way that you act, and it's not always necessarily the positive effect on the way that you act. So learn from your past behaviors and be aware of what the emotions are.
I mean, learn from past behaviors. I know many stories where people have gotten swept up in the excitement of somebody else buying something or hearing on TikTok or social media about a great stock that they should buy. And you got to take a step back and figure out, is this right for me? And not just, oh, well, my favorite TikToker influence said I should do this and they made a lot of money from it. I should do this. I'm sorry, ladies and gentlemen, that is not your financial advisor. That is not the best recommendation. Also, developing a disciplined investment strategy. This is what I was talking about. It's important to diversify your portfolio. You hear the phrase all the time, don't put all your eggs in one basket. So make sure that your risk is diversified between different levels, setting and adhering to investment goals and rules. Investment is not meant to be a set it and leave it alone. It's not meant to be something that is played with 24/7. Yeah. It should be somewhere in the middle where it's observed, it's monitored, it's watched, it's adjusting as you adjust and as things come up in your life. So it should be well balanced in what fits you, how your portfolio is set up. How Court and mine and Cam's portfolio are set up are way different from each other because the three of us are very different. We have different family structures. There should never be a day where the three of us are invested the exact same way because that's not how it should be. Psychological coping mechanisms.
Pills?
No.
Yoga?
We are not the Matrix where everybody who comes in, we just hand them a pill and that's how they cope. No.
Techniques for stress management, they're out there. I've done a lot of reading on this particular topic, stress management, stress theory, trying to regulate and manage your stress. And I haven't yet found really the full solution to the stress problem. But
let me know when you find it.
Yeah, some of the methods do help. So if you haven't looked into that and you're an emotional person and it affects your investing, then you might look into it.
Well, I think especially if we're talking about investing, the markets nowadays, whether you are working with a financial advisor, you're doing it your own, it's 24/7. You can have it on your phone. You can be looking at it 24/7. Mm-hmm. So you can sit there and literally watch a roller coaster. You can see one day you're up, one day you're down, middle of the day up and down. You can drive yourself crazy watching it. Yeah. And so maybe that's a part of your stress of knowing, hey, I have to trust the process. I have to trust the plan. I'm not going to look at it, but once a month or once a quarter or whatever it is. And so that's a way of helping kind of with stress management, eliminate what's the stressor.
It's funny you bring that up. I'm a relatively new investor, as you know, and I've heard you and David warn against it. Don't just look at it every day, but it's hard not to. Logging into that 360 app and just looking at it.
Mm-hmm.
The funny thing about what I think most people imagine stock market trading being like versus what it's actually like is they picture that we're all sitting at computers watching stock prices go up and down, and we're like, sell that one, buy that one, and
it's not like the 80s
just
stock
not like
movies.
That's not how we do it. That's not how you should do it. First of all, I mean, especially if you just bought the stock and then you sell it when it gets up a little bit because you want to turn around and invest in something else, you just had a short-term gain.
Yeah, there's a lot of things. And we tell people all the time, like, look, if you're wanting the hot stock tip of the day, if you want to be, you got to be a day trader.
If you want to time the market, that is not us. We're very much like slow and steady wins the race.
We want to be in a position where we're able to have a 30-minute conversation with someone and help guide them on a financial decision, or spend an hour with your mother because she just lost her spouse of 50 years and we want to help reassure her that she's going to be okay. We cannot spend time with our clients 30 minutes, hour long, and also be watching the market 24/7.
Right.
So it's got to be a balance of we and ourselves are trusting the process and knowing what's best for our clients. Now, obviously, we are very well aware of what the market's doing. We're aware of like what's manipulating the market, Federal Reserve, announcements, things like that, earnings reports, all of that. But
the CPI, there was inflation. The inflation rate's going down still, so that's good. That was the big news this week, I guess.
Yeah. And so I think it's when you're looking at emotions and trying to figure out managing them and the coping mechanisms, you also need to understand what kind of investor you are. Mm-hmm. And most people think, I'm not an investor. Do you have a 401k plan? You're an investor. You are investing.
When you put money in a 401k, you're putting it into a plan. And when it asks you those questions, when you set your 401k up, like what type of person are you? How old are you? How many kids do you have? It's deciding what sorts of basically funds it wants to put you in. And the funds are made up of different stocks and bonds and whatever else. So, you've got your money out there in securities. It is the way it is done.
Emotional awareness and discipline in investing is super important. Managing the emotions to enhance your investment outcome is also. And, go back and listen to some of our episodes where we talked about everyone needs to understand it. Whenever somebody comes in here and says, well, I don't really understand this, but, do whatever you want. No. We're going to understand this. I want you to at least feel a little bit more confident that you understand the ins and outs of what your money's doing, because that's important. Because we've talked about before, if you've got one spouse who's really running it all, the other one needs to understand, because then that can cause emotions with investing because they don't understand. Mm-hmm. They don't understand what's supposed to happen. And if your advisors are shying away when things are not great, that's a red flag. They should be able to talk to you about why it's going down, or meet you with your concerns on should you stay, should you get out, what should you be doing? And then ultimately, because of Courts and my behavioral financing background, we truly understand, and I say this almost every day, this is my financial recommendation. This is what I really think you should be doing. I think you should be, staying the course and stay invested, and we'll get through this roller coaster. But then I also understand and recognize tummy factor, that your feeling may allow you where you can't do that. And that's fine. And that's where we can then meet in the middle, because ultimately everyone comes from different backgrounds with their relationship with money, having it, not having it, how they grew up, how they want it to be spent and saved. And so, yes, it's like if you as an advisor know what's best for them to meet their goals, you sometimes have to change that because you also have to meet where they are with their money. I guess that was my really long bullseye.
That was your very long bullseye. I don't really have anything to add to that.
And Cam's got this great little chart that maybe we can post with this episode that just shows the emotions that go with investing.
Yeah, if you want to see a detailed version of it, go to picklerwealthadvisors.com/bear, BEAR. This is that field guide Katie was talking about a few minutes ago. But it's kind of fun to watch the optimism up to euphoria, where the bull market ends, and then it dives down into despair, and then the bear market ends there, and it picks back up. It's a sine wave, y'all.
Oh, there's the closing bell. Ladies and gentlemen, you've made it to the end of yet another episode of the BullCast podcast. If you liked what you heard and you'd like to hear more, please feel free to go to your favorite subscription service and sign up to have our podcast beamed directly to your device every single Thursday at noon. If you'd like to find out more about Court, Katie, Cameron, or Nicole, please go to our website. That's bullcastpodcast.com. We've got a place there where you can drop a comment, suggest a topic you'd like to hear us talk about, or suggest a guest you'd like us to have on. And there are also pictures in our bios there on that website. But hey, if you like pictures, why don't you go on over to Instagram? Our Instagram handle is @BullCastPodcast. And we also have an X handle. That handle is @BullCastPodcast as well. We have a Facebook page. Our Facebook page is BullCast the Podcast. And finally, ladies and gentlemen, as we mentioned so many times, we work at a place called Pickler Wealth Advisors. And if you would like to find out more about us, more about what we do, more about what we can do for you, find out about our amazing team and find out about our boss, David Pickler, please feel free to go to that website. That website is picklerwealthadvisors.com.
That's advisors with an O.
Not an E.
Ladies and gentlemen, we have given you everything you need to go forth and be calm. So for now, I'm Court.
I'm Katie.
I'm Cam.
And we're done.